Don't let the tax tail wag the value dog. Hi, I'm Josh Horn with Horn Valuation. I help business owners and attorneys with business valuation and improving business value. So it's tax planning season, and I was a tax professional for 15 years of my career. So this holds a special place in my heart. I like clients, business owners, to do their tax planning in October and November if at all possible, because once we get into the holiday season, it's very difficult. But here we are, and the human condition is to usually procrastinate. So those of you who haven't done your tax planning, please listen to this, because these are the mistakes I see made a lot of times without enough thought. So the first one is paying owner compensation in excess of working capital. Please don't do this. The temptation is we've got some cash, we're going to have to pay some taxes. If we don't bonus this out, take a bonus to ourselves as the owners, let's bonus it out. And one of the things I see get messed up here is there is not enough real thought put into how you calculate that bonus. You don't want to bonus out more cash than is necessary, to the extent that you're actually going to have more current liabilities than you have current assets in the business. If you do that, you've destroyed value. Secondly, buying equipment that you don't need. Please don't do this. Another easy temptation. Okay, we've got the cash, we need the truck, we need the machine, let's buy it. Do you really need it? And let me start out by saying, please don't run unsafe as a business. I'm not advocating that. However, is it going to generate future cash flows in excess of what the old equipment is generating now? That's how you have to look at it. Don't just look at it purely from a tax deduction standpoint. Another thing I see way too often is those trucks go out on the lot and they don't go to job sites. Don't do that either. That's silliness. That's a wasted asset. Finally, borrowing without a strategy. Much related to the equipment, you go out and borrow money to buy that equipment, or however you incur borrowing without a plan. I'm not 100% against borrowing. Don't misunderstand me. However, you need to have a plan on how you're going to borrow and the strategy related to it. If you get debt in excess of equity, anyone looking at your business is going to go, what is happening here? This is something where you're actually, again, destroying value, where you're getting the allocations messed up and you're taking on way too much risk. Yes, you get the interest expense deduction on the tax return. However, you're also obligated to make the principal payments on that debt, usually for years. So be very careful here. So if I was to sum it up, I'd say be really careful with dumping cash into assets that aren't going to appreciate back to your business. Now, you have to have equipment. You may have to borrow to do it, especially if you're a capital-intensive business. However, let me encourage you to think of 3 things you could invest in no particular order, that could generate cash and value way in excess of what those other things are doing. The first is people. Yes, people are probably your most expensive outlay outside of maybe cost of goods if you have inventory. But a good person can add 2, 3, 4 times their annual salary if they're a good fit for your organization. They can add a lot of value. The second is marketing and branding. This, again, is sometimes immeasurable. And what I would encourage you to do is to develop a detailed marketing plan, a detailed branding plan, because these things are going to possibly return exponentially to your business. And third, a retirement plan. It's very easy to set up a retirement plan for a business nowadays. And this is something that should, if done properly, should grow in value over time. Again, we're moving towards putting tax deductions, if you will, cash into things that are going to grow over time and improve the value of your business. Talk with someone that understands the retirement plans. There are many options. You need someone that has done this before for a business. In any case, these are three options that can allow you to actually increase the value of your business as opposed to possibly dumping money down a hole just to get a deduction. You may need that equipment. You may need to borrow to get it. You may need to pay a bonus. But think about these other three I bring up first before you go down that road without a plan. Don't let that tax tail wag the value dog. This is Josh Horn with Horn Valuation. Have a great day. Have a great holiday season. Bye-bye.